Before we get started, I want to do a quick disclaimer that nothing we say here is investment advice or marketing or advertising for Drill Capital, Bornite, or any of their funds or products. Everything is meant to be educational and informative about the fund management industry. Welcome to another episode of Other People's Money. Today, I'm joined by Farid Guindo. He is the CIO and founder of Drill Capital, which is a spinout from his prior fund, Bornite Capital. Today, we're going to be talking about the dynamics of a spinout fund, a lot of the most successful launches over the last decade, and really going back decades in this industry have been spinouts. But let's go back a little bit earlier in your career. You actually started at a Tiger Cub, which is famous for their spin out. So let's talk a little about your career and then we can get up to drill.
Yeah, thanks so much for having me, Max. Yeah, as you mentioned, my first break into the buy side was joining Osprey Management. It was a Tiger Cub focus on the commodities sector, and they continue to focus on the commodities sector today. And in really joining Osprey was a function of having developed just terrific IP on the energy side. From a very, very young age, I got the opportunity to travel around the world, and I got to see how the United Nations deployed its supply chain, its resources in various countries around the world. And I was always curious about energy. And it wasn't until I got to school where I was able to join a M&A group that focused specifically on the energy sector. And this was a time where really the energy sector was, very, very relevant around the world. We were looking for that incremental resource to power the cities that were, without a doubt, or densifying and
This is
urbanizing.
pre-shale, like peak oil days.
It's actually the advent of shale. So
Yeah.
I didn't get started in 2005. I graduated in 2009, but I got to see these were brand new technologies for all intensive purposes. This was an industry that was getting in North America capitalized for the first time, right? We were taking a lot of these companies public, doing a lot of joint ventures with energy companies and governments around the world that were looking for collaborative venture capital towards this new technology, towards shale, towards oil sands as well. That was very similar, right? Because oil sands added another 50 to 100-year resource life to what we had. And then also towards LNG, which was the movement of natural gas molecules efficiently around the world, right? And to power the areas around the world that don't have the electricity that we have today in the OECD. And so this IP was just terrific, Max. And so it allowed me really to get into the buy side after investment banking, again, a couple of years as an energy specialist. And at Osprey, really, I got to see, to your point, how spinouts work. There's enormous amounts of talent. When I got to Osprey, these were individuals that had a lot more experience than I did, and I got to learn from some of the best out there, including Dwight, who ran commodities for Julian Robertson, and then also a tutor. And really, it was just a terrific experience to continue developing the IP that I had developed early on in banking, including while at school, and to really see how capital was deployed in the energy space. Mind you, also get to see how you get tremendous talent that was at Osprey, how they evolved into different potential vehicles or their careers all together in different areas of the market. So it was just a terrific seat to have very early on in my career.
And I know you went to a couple of funds before finding a more long-term home at Bornite, which you were part of the founding team there. But you got to work at a Point 72 spin out as well. Obviously, Tiger Cubs are known for their willingness to take on a bit of beta to their theme, whereas Point 72 more of like a traditional market neutral low beta strategy. So you got to see two different spin outs, two different sort of views of the world, and then got to start Bornite. So, can you talk to me a little bit about getting on the founding team at Bornite? And then you were there for 5 years. Things are obviously going very well there. One might wonder, why get off this rocket ship?
Yeah. So look, the point 72 spin out, that was a terrific experience because it allowed me the ability to now familiarize myself with what's referred to in the industry as low net slash market neutral, right? And in that type of investing style, it is different from your traditional Tiger Cub that where you get to see a little bit more direction, where net exposures on the portfolio basis are plus 25, 30%, all the way up to 50 plus 50% in many instances. Here, the focus in that model was really to isolate idiosyncratic alpha and doing it in a way where your portfolio is not overexposed to one specific factor in the market, like value or growth or any of these factors that allocators certainly don't want. And so it's a different flavor. Certainly, it it tends itself certainly towards more fundamental analysis. And my background as an investment banker and getting to really be part of the formation of the capital markets around North American producers and that this whole ecosystem that we built really recently, by the way, was incredibly valuable here because it really lends itself towards understanding the industry really well and then just making sure that you can protect your portfolio as well with likely like for like securities on the other end. So in a way, you're always looking for short alpha opportunities as well, right? So certainly a lower duration strategy. You're not looking out many years ahead. Very different flavor, but it was terrific again to get that flavor of that investment style. Certainly, as it relates to managing a portfolio efficiently, managing for risk efficiently in a specific sector. Which, by the way, those learnings are all translatable to what we're doing today at Drill Capital. It's exceptionally valuable to what we'll be doing. Look, at Bornite, we were a generalist fund. So the story there was all along the way, yes, I worked at a Point 72 Spinout, also worked at an energy fund based out of Texas. But I kept a close mentor that also went to McGill, Daniel Dreyfus, and he had spent 13 years of his career at Goldman Sachs, really investing in a generalist mandate. Now, mind you, his focus was on commodities and industrials. And then he spent 6 years running a natural resources fund at 3G. And all throughout really my career, I had reached out to Dan when I was in school. And we started interacting on ideas really when I got to Osprey a lot more with further velocity. And I think that relationship was really a long-term relationship. We always wanted to work together. And in 2019, we finally got a chance to, and we launched Bornite in January of 2020. Now, the generalist mandate, we went back, by the way, to the Goldman mandate that Dan had. Now you got to sit as a generalist and investing in energy, which was, I think, a terrific sort of add on to my skill set. Because here, you really got to scrutinize the dollar that you were investing in energy relative to other commodity sectors and relative to also other sectors in the market that we could invest in, right? So energy really had to compete against everything else. And sometimes you just didn't have to put capital towards it, right? And so that perspective was incredibly valuable, much different versus what I would call the market neutral approach, the point 72 approach. However, in the generalist approach and at Bornite, we looked out the next long term, right? We wanted to take a 5-10 year view. When we were underwriting free cash flows and going through our analysis, mind you, the quarters were still something that we would keep on the radar and would go through the numbers. Yes, but we wanted to take a 5 year view and underwrite normalized free cash flow over the next 3 to 5 years. And that was our differentiator, right? And so very different investment style. I think what we'll be doing at Drill Capital will be likely a bit of a mix of both. I'll be able to focus on one sector of the market, which is the energy sector. We'll do a lot more relative value, right? But we'll also have in our analysis of how do we figure out if this company is worth buying, a much longer term view.
Okay. And I want to get into that mentorship aspect. I'm sure almost everybody who has made it in this business owes some of their success to a mentor. You'd spent a long time interacting with Dan before you actually got to work together. It's a tough question. Was it something where Dan reached out to you and said, "Hey, I want you to join this team," or did you have to do a little bit of pulling on yourself as the mentee in the
Yeah.
relationship? Where is the point that you say, "Hey, I want to work with you," or does it go the other way?
Yeah, that's a great question. Look, I think, and this is really relevant to the part of the audience that is looking longer term and looking to build their careers, right? How do you really develop those long term relationships? I think you and what I did really early on in my career was, if you're passionate about finance, you're passionate about the market, then certainly you are going to have to be a detective somewhere, right? You're going to be digging for an idea somewhere, right, in the market, and getting clever on one area of the market. And hopefully, when you do that enough, you'll become an expert in one area of the market, and that becomes valuable as you have these discussions and conversations. Certainly, you need initiative to reach out. You should always be reaching out. I certainly kept that as a habit from school onwards, right? Reach out to people, validate your ideas, right? You do your work and you come up with these great ideas. Again, if you're passionate about the market and finance, then share them and validate them. And if they're great ideas, then I think people will take notice. You'll get introductions, and whatever inflection you're having in your career, as you're having those discussions, you'll realize that opportunities will eventually come to you. So that was no different in the approach that I took with Dan. I reached out, I wanted some advice early on in my career. That translated to sort of an ongoing discussion friendship that we nurtured together. But I always made a point for my approach. I always have to come into that discussion with at least two or three ideas that I've really spent a
Yeah.
lot of time researching, that are long term, that are differentiated, where hopefully Dan hasn't spent that time looking at that, right? Because I think that's a win in that type of interaction. If I
You're
can,
not coming to him with like, "I think Exxon's gonna beat next quarter."
yeah, exactly. You're coming in with something that's hopefully well researched, differentiated, long term, and hoping that he hasn't seen it, but he typically sees a lot. So yeah, it has to be good, and I think it's part of the discussion. You want your discussions to be where you have, again, two to three ideas in the back pocket, right? You've studied this stuff inside out. You have perhaps met or talked to the management teams of an idea that you're kind of diligencing, right? And that goes so far in terms of advancing those discussions to, okay, this is actually a person that could add value to whatever I'm doing, and it lends itself to this discussion towards the opportunity, which is let's work together. So that's kind of how I would initiate what I would call building a long-term relationship in this industry, in this business, making yourself valuable. Uh, don't just grab coffee with someone to just grab coffee. Come prepared with something hopefully valuable that you've researched. Because at the end of the day, we're all researchers, and that's where ultimately you can add value.
Yeah, so you're definitely on the side of like share your ideas. They're not as proprietary as you think they are. I mean, I'm sure we've probably all seen like that famous like email back and forth between Dan Loeb and that poor guy who he was like, give me a pitch, and he's like, no, I don't want to give you my hard earned ideas. And let's just say they didn't end up working together. So no, that's very interesting. And so at Bornite, you were there for about 4.5 years. You're the head of research, part of the founding team. The fund's been successful both in asset gathering and in terms of performance. That lends itself to the question, why did you want to go out on your own?
Yeah, great question. Look, it was always my ambition to one day build my own investment vehicle and platform. That was always the ambition. And actually, really prior to Bornite, I had the opportunity to run a little bit of risk capital within one of the umbrellas that Osprey, or at least Dwight is a board of part of a board member of. And And so that was an opportunity that was also there. But I felt like, look, pre 2019, I felt like it was important for me to continue investing alongside someone that had a broader mandate, right? So I was, very much energy focused for all the way up to that point in my career. But I understood that energy had so many other sectors that were linked to it, in effect. And in a world where we were transitioning from one energy system, legacy energy system, to another, hopefully cleaner energy system, mind you, in the OECD, in the developing world, we're going from zero energy systems to some legacy energy system, right? That ultimately I had to complement that experience and skill set with industrial companies that were linked to energy, right? With metals and mining, with agriculture. And I had some exposure there from working at Osprey and from seeing sort of the diversity and commodity groups that we were covering. But I wanted some real tangible hands-on investing experience as well, especially if the long term was always to run capital myself. So it was always in the back of my mind. I was transparent about my ambition with Dan, always in light of really doing it under the Bornite umbrella. To start, we thought through, what that could look like. And ultimately the conclusion there was there was going to be some overlap with what we were doing it with respect to our flagship fund. And more importantly, the resources, right? Bornite, we were always proud to say that we were a small, effective, very productive team. But here, if you're sort of adding another product, you're automatically cannibalizing your team's resources, focusing on something else, and it's a distraction. And so, as that conclusion was very clear, again, just having that relationship with Dan, he was super supportive of the ambition, and he agreed to really look through the entire process and support me throughout the process, and as well invest in what would be a clean new vehicle where I would have ownership of and be able to build my team. So look, the discussion was certainly detailed and lengthy. We explored several avenues, including the one where we would look to do this internally. And I think the ultimate scenario where I got to keep ownership, build my own team, have Dan really supporting this, and he rolled the red carpet across the banking relationships, across the service providers. It was just terrific. And I was able to kind of bounce back and forth ideas as we were ironing out every aspect of the fund formation. It was just a win-win. And again, it just goes back to having a great mentor in the business. For me, it was certainly important to be transparent about my ambition, and he supported that ambition for sure.
I want to ask about walking the fine line. Like, I've heard about some stories of they're interviewing a potential analyst to come on as a junior, and they're like, "Well, I'll stick around for 2 years, and then I'm going to go launch my own fund." And this is somebody with like no buy side experience. So obviously, there's making Dan aware of your ambitions, but also waiting until the time is right, till you've put in the work, until you have something that is differentiated. There's a little bit of crossover between what you're doing and what Bornite is doing, but how do you walk that fine line between making your expectations and your goals clear, but also waiting your turn?
Yeah, that's a fantastic question. I think the this is a performance business, and performance really is the driver for everything, for us being capitalized. And there needs to be success. And success, what I mean by success is really performance. If there's performance, then certainly the audience is already there, right? And so that was a requirement, certainly, for me. If performance isn't there, this isn't, or there's not some level of success that's been created for the investor group. And for us, really, we launched with internal capital at Bornite in 2020. Most of it was Dan's capital, and then we built our support through 2020. Mind you, there was COVID, right after we launched, but we were really successful through and managing protecting capital through that period, right? It was certainly a huge test of our risk management systems, a huge test for what we were setting out to do, and we made money through COVID, right? And so beyond that, the overall 5 years or so that I spent, close to 5 years, had to be successful in order to have that discussion from a performance basis, but also from the business, perspective, making sure that we're assembling the right team when we have the right people that are there, right? So that you're not a huge impact when you do decide to go out on your own, making sure that AUM is growing, right? That you're getting supporters, but they're also growing with you. That's also part of the formula for success. But most importantly, it is performance, right? Performance has to be there. And then when it is, it makes everything so much easier discussion wise.
And so did you have your own sleeve? Did you have a portfolio that you could point to, or is this purely like these are the names that I got into the book and this is how they performed? When you're assessing performance as an analyst versus somebody who has their own sleeve, it could be very different.
Yeah, exactly. So many of the multi managers out there, they'll have the sort of carve outs specifically, but this was never really the Bornite model. This was a single manager fund with one
Mhm.
CIO. Dan was the CIO, and so the performance that Dan built effectively really, as part of the research team, I contributed to that, but really that was his track record for all intensive purposes. Now, as an investment professional, I saw through what was a terrific time in the energy cycle. Right, we were able to buy really for cents on dollars. Think of going back to that COVID moment, right? Really catch that energy cycle early on. And so for me as an energy investment professional, I also participated in that, which was incredibly important in terms of coming out with an energy specific fund, right? You want to have seen the down cycle, but also the up cycle. The way that we collaborated with respect to ideas, we never kept track of this is so and so's ideas and this is how much we're going to attribute. This was a single manager model. Dan ultimately made all the decisions, the final decisions. But the research process was very, very intensive. I covered the energy sector for the most part. And again, these were companies that I was very, very close to going back to my banking days, right? So this was an area of the market that if we made investments. I spent enormous time building out the analysis, following the companies, making sure the sizing was correct as well in our portfolio. And so that's kind of how I would characterize it. And certainly that's how we're characterizing it as we're going into our launch in January.
So you had the conversation that came to the conclusion that this should probably be its own vehicle. You felt like the performance was there. You had learned enough from Dan that you could manage a portfolio as well as generate ideas through the research process that you were a huge part of. Let's talk about the economic conversation. So, the
Mhm.
typical spin out, somewhere between 25-30% is going to the seeder in terms of their stake in the GP. Was it that typical model, or did you and Dan work out something different?
So yeah, the discussion on economics is certainly very relevant for anyone looking to spin out their fund. And what we typically see out there is plain vanilla. You get roughly 30 million to 50 million, call it, of capital from a seeder, including potentially a sponsor, your ex-employer, right? And they'll keep roughly 25 a quarter of the business, a quarter to 30% of the business for 30 to 50 million is really how I would think about it. And, there's many layers of what that support will look like, right? So the support could be some infrastructure support operationally. There's a lot of external CFO outfits that are out there. Having a solid CFO is probably one of the biggest priorities as you're looking to set up an institutional platform. You have to get all the service providers, the A++ service providers, be a part of your team and build that bench. And I think that's one of the advantages of again, having a sponsor, parent, or seeder come in is they will sometimes give you that operational support so that you're up and running. Now, the added layers beyond that really could be anywhere from strategy, right? Thinking about your investment strategy, your process, getting valuable feedback from someone that's already done it, right? That's gone through the steps already, leveraging relationships. Mind you, the banking ecosystem is incredibly important to launch a fund. Getting their buy-in into what you're doing is really important, right? Otherwise, they're not going to sell you out there. They're not going to mention you out there to their clients, and their clients are the allocators that we all look to serve. And so that's also an aspect of the support, right? Getting those relationships with the capital introduction teams at various banks. And then, and finally, what I would say is the capital, right? The capital allows you to build a track record. So that 30 to 50 million allows you to have a track record that you can speak of, over, let's just say 12, 24, 36 months, and that you can kind of go out there and market. So in combination, that's really what you get as a manager. And then you give up about quarter to 30% of your business. And you get all this support, which is terrific. Now,
Well, and at
you
that
know,
30 to 50 million, the conversations with allocators, they can actually write you a meaningful check. I mean, for a large allocator, they don't want to be too big as a percentage of your fund. And if you only have 10 million, 20 million, that check might not be worth it for them to even start the due diligence process, because you're not going to move the needle for them in their overall portfolio of managers. So being able to have 30, have 50 allows you to have those conversations with larger investors from day one versus at year three.
exactly. It accelerates your business, right? You get to focus on investing and not building the business. And some people they want that. They just want to plug and play and literally just invest, right? And not everybody wants to build a business. Not everybody wants to build that team one person at a time, including on the operations side, and build out the systems and create something really from scratch. Not everybody has that ambition, which is fine. That kind of leaves that white space for guys like myself. I'm incredibly entrepreneurial. I love the aspect of putting these elements together. In addition to being an investor, I think it feels, especially on the research side, when you do build your team from scratch with existing folks that you've worked with, you can really, I think, do wonders in terms of your own investment process and providing value to clients ultimately. In my example, when we reviewed this, it was really important for me to build a team, and so I was able to sort of retain the majority of the economics, and that currency in effect is what I'll be using to incentivize, again, the best people to build out the operation side. So I brought on a CFO this summer. I had a trader as well in October. And so that's really going to be our executive team, including myself. I've known these individuals for a long time, since really 2016, including working with them at the Point 72 spinout. And so that's going to be really that sort of executive team that we'll have day one. And then on the research side, I'm leveraging the pool of candidates that I've helped mentor and train and develop over my career. Right? These are individuals that I know, and that really I've put a lot of effort in sort of making sure they understand how the industry works and specifically how energy works. And so we'll probably have two or three individuals there, but using that currency to build out what you need to build out to have an institutional day one platform is of utmost importance, especially if you get to keep that currency, which was the case for us.
And to be clear, the currency you're talking about is percentage points in the business. Being able to go to the CFO, your head trader, and say, look, obviously we can all do the math on what 1.5% of management fees comes out to on 30 to 50 million. It's certainly a great start, but it doesn't pay the types of big salaries that you might see at a large multi-manager or some of these other huge multi-billion dollar firms. And so to bring in the type of talent that's choosing between going with you and trying to build something, or going somewhere where there's more certainty of capital, there's more resources, etc. You have to be able to offer them a seat at the table, and that's what retaining those points allowed you to do.
Yeah, absolutely. And Dan also was really much aware of this because again, he's going to be investing in the business, and he has an incentive to see this work well, and he understands that building a team is important, and it's better to be a part of something that actually is successful, where you're incentivizing the right people versus having, let's just say, the capital where you're just a one man show, right? Like that just a one man show doesn't really go really far to solve, I think, that the pressing problem here, which is again the underexposure in the investment allocator community in a dynamic where we have enormous amounts of inflation, sticky inflation, right? We have labor inflation. It's just tight everywhere in terms of what we're seeing on the supply chains. And so when we're solving that problem, we need a team approach that allows us that credibility to actually go out and tackle that problem, which means building a portfolio, being able to track the portfolio, all the positions in the portfolio, doing fundamental research, bottoms up work, rebuilding our model library from scratch, making sure we're interacting with our clients seamlessly. And so they have access to all this information that we're building, and our views of the world. That takes a team, I think, to be able to realize.
So I do want to clarify just one thing. So you aren't getting that big $30 million check from Dan. It's more of a smaller, he's part of the internal capital that you're launching with. So you're doing a smaller launch, and obviously it's not until next year, so maybe you'll bring on some other outside investors into that sort of like founders class, where they're getting a discount on fees. So the exact launch number is not set yet, but you're not getting the big seed.
Exactly. Yeah. We chose to really, again, build a business, really take our time with this. We have, call it two decade investment thesis on the energy sector. We have duration on our time. We really get to take our time and build this. So we're going to launch with internal capital, call it really 5 to 10 million. Dan will be part of that group of early supporters. Within that group as well, though, you'll have actually prominent family offices and some institutions that just they're writing sort of token amounts as they finish up and wrap up their due diligence, which could take a couple quarters. And again, purposefully making sure that we retain the economics in order to build a world-class team, taking our time to build out the business. But what I would point you to, though, is it's kind of going back to what I'm excited about and what problem we're solving, right? We're not solving for anything other than the core SMA client, right? Your separately managed account, your institutional pools of capital, where they again have an underinvestment in energy in a world where there's inflation, and where we think energy exposure, we want to help them fulfill this energy exposure. They're the diversifiers. They want that sort of one energy expert. They want a technology expert. They want a consumer expert, and they want to be the diversifiers. Yeah. So and look, in that if that's the problem we're solving for, that's the client. Really, that client really has, let's say, on average, 25 to $50 million on average ticket, and we're having a handful of very fruitful discussions with, again, that's the core client what we're solving for, and that's really the chunk of the capital that we're going to get. And again, these clients take a couple quarters, and it was important for us to kind of get up and running in January, which is why we're getting up and running in January, so that they can complete their due diligence into the end of next year. So yeah, certainly retaining the points, really allowing ourselves to really take our time to build this business, focusing on the team, leveraging Dan's incredible support, including his investment, which again, it goes so further. It could be like $1, right? But it's so important in every single conversation that we're having, because again, that's that's the experience, that's the success model that we're looking to replicate in a more finite, specialized way. And certainly we're thrilled to have him as part of the early supporter group, and we'll take our time to kind of build the capital stack from here.
Yeah, and you talked about the token positions, like, I think everybody's, like, bought, like, a 25 basis point position in, like, a stock that they're starting to monitor. So
Yeah.
would you say allocators almost kinda do that too? They're like, "Alright, we wanna follow these guys, maybe we'll write them a real check down the road once we've seen a little bit more, gotten more comfortable with it, but for now, this is like a tracker."
Yeah, exactly. Like some are taking that position. They've told me, look, Farid, we've tracked, we know you, we followed you, we've invested with you, and think of us as day one slash year one, and we might come in with a small token amount, but let us just kind of do our due diligence. Like these are big pools of capital. There's a process that has to kind of follow, and we're certainly comfortable with that. These are long-term relationships. Everybody should take their time as they kind of wrap up their diligence. But we know that, again, this is the opportunity. These are the clients that are looking to make that investment in energy, and certainly we'll have these supporters hopefully going into next year.
Now let's talk a little bit about what you get to bring from Bornite in terms of a track record and how important that is. So obviously Bornite is generalist. There was energy and industrials was a big part of the fund, but not entirely the same. I know the SEC won't you can market a past track record, but it has to be close enough strategy wise to be relevant to the new fund. So, what were you able to take from Bornate? Do you have to break out certain sectors and do attribution in that way to be able to use this past track record? And is that something that you had to get permission from Dan to be able to do? And again, going back to those
Yeah.
relationships and building a good relationship with your boss.
Yeah, absolutely. Anything and I would kind of go. This goes to kind of the audience that the investment professional looking to do this one day, or going through the same steps. Yeah, but being super transparent is really important throughout the entire process. Sharing absolutely everything with Dan in terms of how I was thinking about what I needed, right, and including the track record. And so, yeah, yes, Dan has allowed us to use the track record, our investment track record since 2020 when we launched. But mind you, this was a different strategy that we were putting together, right? This was a energy specialist fund that was low net exposure. So think of your net exposures as closer to 15%, your teens percent exposure. When you compare that to what we were doing at Bornite, we were running closer to 60 to 70% sometimes net exposure. But it was really a variable exposure model where we were taking a direction one way or the other on the market, and super different investment strategies in that regard. So that's really point one. Point two is on again, because we're specialized, we're going to do a lot more relative value. Actually, most of our portfolio is going to be more relative value, right? So it's really the only way we can get our net exposure down, right? Because we want a fraction of the market exposure, right? And be able to deliver alpha through our stock picking, right? And so because of those attributes, the track record, mind you, Bornite's track record, and we get Dan's reference, his investment, his support, and the track record, including in even if it's broken down by energy or industrials, et cetera. But we also have to keep in mind, and for anyone underwriting this, that at Bornite, we didn't have to be invested in energy, right? In fact, we could use energy exposure just as our hedge and not have any energy exposure on the long side, or we could just simply be sitting on the sidelines and not invested in energy. And so, very different. I think the most important thing is always to ask if you're going to be using something that you've been a part of and building. You should always sort of bring it up and ask in the discussion. Always be transparent. Again, this is a long-term relationship you want to protect and preserve. And we were just certainly fortunate enough that with Dan on our side, he's just an incredibly generous person. He speaks so much to who he is as a person and his character. And we've gotten that feedback from this transition, right? From allocators, is that they really haven't seen something so smooth in terms of a transition where someone's looking to build their own business and have a mentor support it, like what we've seen here. And so, yeah, we have, again, Dan support his investment. We'll get the track record, but we also want to sort of asterisk what we're doing is very different from what was being done at Bornite. That's for sure.
Yeah, so my first guest on the podcast was an activist short seller, and he launched some long products, and he told me that some of the conversations with allocators are like, well, we don't know if you can do this. We know that you can do this short activism. That's what you do. And he's like, wait, you don't think in-depth research applies on the long side as it does on the short side? And so I guess, how do those questions go? You've been doing this for 5 years. You've been able to be nimble, both in terms of your net exposure and the sectors you're allocated to. Do some people say, well, Farid, how do we know that you have the skills to do this?
Yeah. Look, it's a fair question. Some relationships take time to develop. Certainly, I'd say one of the most successful relationships on the capital side that I've seen develop took 3.5, 4 years, close to, 3 years. And but that was a relationship when they finally decided to make an investment decision and invest in support. It was a complete game changer, right? So I'm certainly patient for that. I want to build long-term support with the right pools of capital. We're not going to accept any sort of support and dollar amount. We're going to definitely scrutinize it in in relation to our ambition and make sure that it's also capital that is long-term thinking, because we're long-term thinkers. This is not a short-term trading shop that we're trying to build here. We're going after, again, a 2-decade plus thesis where I believe that over the next 25 years, as we add 2 billion people to an 8 billion population, we're going to need a lot of energy, right? And to be able to fulfill that, it takes long-term support and long-term investors, and we're going to certainly be picky with that. And but ultimately, to your point, getting to know the investor, the investment manager, does take time, and that's okay. That's certainly okay. And during that time, you have to be super, super transparent, still roll out the red carpet and make sure everyone has the right data and that you're able to tackle some of the, perhaps the problems that the allocators underwriting in certain cases. I'll give you an example. Some allocators really care about sustainability practices and how you engage with companies, right? And they'll really want to get into those details. But just being able to provide all that information seamlessly throughout the process is still very, very important, because that still goes into the decision making process of ultimately winning that mandate, right? So we're going to be taking our time. Luckily, we have existing relationships that we've built over time, over many years as well, that will benefit from, right? So it won't be all starting from scratch, but certainly we don't want anyone to be in a rush with respect to what we're doing. We plan to be here for a long time. Again, a 2+ decade thesis. We have plenty of duration, and let people take their time to do their work.
Yeah, and you mentioned that you're kind of going after like the SMA crowd too, so they can kind of ramp and dial their exposure themselves if they want. So you're going to do 10, 20% net, but if they're really bullish and they want to get more exposure, I mean, they can lever up the product too. And I think that that's something that's becoming increasingly popular, is people want to be able to have that control with the SMA side. Obviously, getting total control in a pooled vehicle is very nice from the manager perspective. But can you speak to the importance of having SMAs available for these larger investors?
Yeah, absolutely. It's very important trend that you point to. I think it's also important to identify the trend where institutional multi managers, they've been super successful in executing their business models, right? And they've received a lot of capital, and there's becoming a little bit more indifference between bringing talent in house versus allocating to external talent, because in effect, if there's a shortage of talent out there, then you're going to be a little bit more okay investing, let's just say, in an independent fund. And so that all kind of are important, topics and developments in this world. A lot of capital towards that SMA environment. They certainly want to be the ones diversifying and kind of picking their exposures, right, to express their various house themes. And we want to play towards that. We want to solve, again, the energy, component of that. To your point on control, the much bigger check you're going to get, like in terms of, if you get a $500 million check, you're certainly going to get certain restrictions around that. Perhaps your mandate and how you run risk may change, right? Perhaps you may be exclusive, so you may not be allowed to raise capital from anyone else, right? What I would say is, again, for our position, being able to, again, leverage the success of Born, an incredible supporter in Dan, having someone that's sort of sponsoring you to do this, having the team that we've built, and the relationships that we've cultivated over the number of years with Alex, we would be in a position where we'll take our time and build a multitude of relationships, at least for the business we're building. We're not going to get into any just one-sided deal, despite the AUM. There's no need to rush. We feel incredibly excited about the mandate that we have. Mind you, this is a very, very unique mandate, right? And Bornite also has a very, very unique, special mandate, especially in the context of commodity and industrial investing, right? And it's a mandate that allows you to protect, I think, principal, right, while you're solving for giving cyclical commodity exposure. But you're also doing it in a way where your risk envelope actually makes sense. Most risk envelopes out there in the low net, market neutral, you put a lot of these funds independently, right? You take them out of multi-managers, you put them out in the sort of wild, wild west where we have to live with all the dynamics at play. They'll likely fail, right? Because a lot of those funds, again, they're restricted to certain sectors. They can't really go outside of certain subsectors in many instances. And again, we have an incredible mandate. We'd rather take our time. We'd rather build a capital stack and investor base that represents long duration. Again, a multitude of different types of investors, both from a stylistic point of view, but also geographically, right? And that takes time to build. And I think certainly the biggest mistake is rushing it in, let's just say, marrying one outfit with a lot of capital. That's a huge temptation, but certainly I think here it requires a little bit more patience to build the right vehicle.
Farid, is there anything that we missed on the spin-out side that you think people should hear about?
Yeah, I think spin-outs are a method that investment professionals really should use in a market where it's very difficult to raise capital, really difficult to go out on your own out there, to build a brand, to build these type of investment vehicles. It's always better to do it really off of someone's support, someone that's been in the industry for a really long time. In Dan's case, he has 25 plus years. He's built a terrific brand, and he has enormous amounts of credibility in the area of the market that we're looking to invest in. And so I think it's just really important to have that sponsorship for anyone thinking about going down this journey. It's incredibly difficult. And without that sponsorship, your odds, I think, of succeeding are really, really low. Not to say that it's not possible, but why not increase your odds, and why not do things where the path of least resistance is a little bit, more meaningful? I think in this instance, having someone that was a long-term partner was incredibly valuable for me and for what we're looking to do with Drill Capital as we look to launch. And that goes back to kind of like the younger audience. Don't be afraid to send that email out, introduce yourself, go grab coffee with the folks that you look up to in your industry. But don't do it for the sake of doing it. Be prepared, do your research, come with a lot of value to add, at least on the research process, especially if you're a researcher. Be a researcher, right? And it'll certainly go a long way. For me, it went an incredibly long way. Think about it. My first email to Dan to actually working with him was a certainly dream come true. To even getting beyond that, and for him to support me in what I'm doing is just, it goes beyond again. But the seed really was that email that you send out, that sort of follow up, the catch ups, the research you do, the value you provide, and the ideas.
Well, actually it opened one more door that I want to go down. There's so much talk about like hiring well. What about choosing where to work and who to work with? Like, how did you decide that Dan was the person you wanted to reach out to be a mentor? And if you are somebody who's early on in their career and they're trying to figure out where they want to go in the industry, it's the golden age of private credit. Like, do you want to chase these sort of like mega trends like that? Do you want to chase big
You know,
brand names? Where, if you are somebody who's trying to figure out your path, where do you think people should be looking?
it's a great question. Early on, let's just say you're in first or second, third year in school, I would certainly leverage the alumni network, right? Who are the folks that are committed to the school, to your business program? If you're in a business program, maybe you're in a science program, but you can certainly move around the different faculties. There's no one restricting you from doing that, right? Network, right? And so use your alumni network. There's certainly stars that are out there that want to help, that kind of see themselves in you in the past. I would start there. I would also start with reading everything you can on your industry, become that expert before someone tells you to become an expert, right? You do your own reading, your research. One of my favorite books back in school was Stock Market Wizards. And that's how I discovered Dwight Anderson and Osprey. And it factored a lot into my thinking of how do I make myself valuable to one day be able to work for a place like this, or work for someone like Dwight, right? How does that, what does that blueprint look like? And if anything, it'll challenge you to just be sharper in your thinking, in your organization, in your sort of management of how do you get from point A to point B. Dan was no different. At McGill, certainly for anyone to have gone into the Goldman investment group, they're really their only proprietary hedge fund mandate, was such an incredible feat. And I wanted to hear that story. I wanted to hear how he's able to sort of accomplish that. And so, yeah, I would say start with the alumni network, read all the books you can, and don't be afraid to look up these firms. Let's just say in Stock Market Wizards, you have all these terrific Hall of Fame investors. Look up the firms, and why not reach out? Who knows? Maybe you can get an internship, and maybe that's your way in. I think
Yeah.
the moral of the story is don't be afraid to reach out if you have that curiosity in you and you are indeed that researcher. Then share your work, right? And reach out, take initiative, and it'll pay off.
All right. Well, let's leave it there, Farid. Thank you so much for joining us. I just like to remind everybody that this is all educational, informational about starting a fund, launching a fund. None of this is marketing or advertising for Drill or Bornite or any of the other funds we mentioned today. But Farid, thank you so much.
Thanks so much, Max, and thanks for having me.